Welcome back, ladies and gentlemen, and today we're going to be discussing one of my go-to trades off the open. This one is called the give back play. Again, I'm not the original creator of this strategy, and in fact the man who introduced me to this setup had and continues to have a major impact on my personal trading journey. He's one of the IFT moderators, Dr. Dan, and if it wasn't for him and his willingness to share his knowledge and wisdom with us, I don't know where I would be in that journey. With that being said, let me get out the way so I can introduce you to this play. Alright, first we need to see our standout igniting bar followed by our risk pause. However, the difference between the risk pause play and the give back is that the actual pause is inside our igniting bar in the form of a small tail in the lower 1/3% of the move. This small wick signifies most importantly our protective stop and also our trigger entry under the low. Now, if the following bar takes out the low, we jump into the trade, maintaining our narrow protective stop right above our entry bar. And that, ladies and gentlemen, is how the give back play pattern looks like. Notice how I said that is how a give back play pattern looks like. Again, I'm going to do my best to mention this next phrase in most of our analysis videos. A pattern is just a pattern. It's what initially draws our attention to further investigate the higher time frame charts to determine whether the setup as a whole has a higher or lower probability of follow through. Then and only then is when we should decide to pass or play. Now let's bring our attention to the 5-minute chart as the first 5-minute bar is closing and the next 5-minute bar is getting ready to form. There you go, and there you have it, our beautiful standout igniting bar followed by our give back, determining our protective stop and our trigger entry. Now that we've identified our pattern, let's start to build some context. Our first stop, the 15-minute chart. So what do we see? Well, our first 15-minute bar cracking under this long base with clear space for an easy 2-to-1 plus to our first target, pivot 1. And if we get lucky and Cisco breaks under that potential area of support, next will be our ultimate target, pivot 2, which is the next potential area of support. Now that we've analyzed the 15 and established our targets, let's zoom out and analyze the 60-minute chart. In this chart, I'm also looking for potential areas of support and resistance, similarly to the 15-minute chart. The reason I do this in this case is to avoid taking a trade at or near an area of support. And if you look at where Cisco current price action is, we're right below the rising 20 simple period moving average, a potential area of support. However, since we are below it and out of the way of our potential short, we don't have to worry about it. Finally, the daily chart. Let's zoom in a little closer. Notice how Cisco is triggering a sell setup after establishing a lower high. Now, if it's going to continue lower and set a lower low or reverse and continue with the uptrend, we don't know. What we do know is that at this moment, that is a good look, reinforcing our short bias on Cisco. Alright, now it's time for the trade. This time I'm going to do something a little different. I'm going to walk with you and describe all my actions as they occur in hopes to provide you an even more in-depth understanding. But before we get into the trade, if you enjoyed this video thus far and want to see more, hit that like button, subscribe, and turn on the notification bell so you know every time I drop a new video. Now, without further ado, let's continue. Here we go. So as the second 5-minute bar took out the low of our igniting bar's wick, I was triggered into the trade and instantly placed my protective stop right above my entry bar. Now let's take a step further and take a look at my personal risk management for this trade. If you take a look inside the red square, you will notice I shorted 500 shares at an average price of $61.69. Now if you look at the second square up above in the level 2, you will notice my protective stop for 500 shares at $61.79. In total, 10-cent risk plus 500 shares equals plus or minus $50 depending on the slippage. My next move here was a stop adjustment to break even after Cisco moved 10 cents, my original risk, into my desired direction. Next, I threw some orders down at our first target, the exact location we spoke about on the 15-minute chart. Lastly, I throw some bids for the remaining shares at our ultimate target, a location also talked about on a 15-minute chart. From this point on, my job is simply to wait for a potential second stop adjustment opportunity or get knocked out at break even on the back half. In this case, as you can see, we were presented with a second stop adjustment opportunity on the 2-minute chart. This adjustment is called the GBI stop adjustment, meaning green bar ignored. Now let's just hope we get lucky and our ultimate target is hit. There it is. And now for the finale, watch what happens next.